Hello everyone, my name is Nicola Probyn. I am the co-founder and director of the Africa Scotland Business Network. Thank you so much to everyone for joining us today. We've got a great turnout, and thank you to our partners, FirstRand Group, for co-hosting this with us and partnering with us on this. Our topic of unlocking Africa's potential, tax and exchange control, has had a terrific response. So this is clearly something that is highly topical at the moment. And I think understandably so, given that businesses are increasingly having to look for new opportunities across Africa and other regions, and understanding the complexities around issues such as tax and exchange control are highly complicated. So we thank our panelists who are experts in their field for making time to share their insights and wisdom with us today. I'm just moving on a slide. So as I said, I'm Nicola Probyn. I'm facilitating the session today. Our guest speakers today, I'll introduce before their sessions, but just so you have an idea of who's joining us. We have Peprah from Wesgro. He is their Chief Business Officer. His colleague Salman Kajie from Invest South Africa. Tracey Botha, who is FirstRand Group's exchange control expert. And Aneria Bouwer, who is Bowmans' law partner in tax practice. So I think we couldn't wish for a more expert panel today. So thank you so much to the panelists for their time and for sharing your knowledge with us. Before we kick off, I'm just going to hand over to my colleague, the other director in the Africa Scotland Business Network, and she will give you a very high level view of what the network is and what we do. Thank you so much. Claire?
Good day everyone, and a warm welcome to you all from the Africa Scotland Business Network. My name's Claire and I'm one of the 10 founding members of ASBN. So we have a 50-50 split of ASBN and guest participants in the event today. So for that reason, I'm just going to very quickly introduce who we are and what we do. First and foremost, ASBN is a private sector business network. We are managed from South Africa, and our focus is on building a strong and proactive and quite vibrant business network across the African continent, which we then directly connect to Scotland and the UK through our members and public and private sector partnerships. We were founded 8 months ago, and already we have welcomed 150 business people from 62 companies from 7 countries into our thriving business community. And part of the beauty of ASBN is our diversity and our inclusive approach to building a network in Africa. And what's resulted is an incredible mix of businesses from 25 different sectors. They range from startups, SMMEs, right up to African and global corporates. Now that ensures our business community is absolutely primed for networking and making quick and trusted connections with businesses of different sizes, different industries, and of course different countries. Now, why Scotland? Well, apart from my very broad accent, there are tremendous opportunities between the shared economies of Scotland and African nations. Now, namely, that's oil and gas, manufacturing, education, training, agriculture, technology, and of course, Scotland is a world leader in renewable energy. We also enjoy an incredible partnership with the Scottish Government, who work with ASBN to put Africa on the map for Scottish and UK companies. And it's our job to connect them with businesses on the ground here in African nations, and of course, vice versa. So please do stay in touch with us. We are across all the socials and LinkedIn. We have an awesome and well-managed digital presence. And if you would like to get to know our team and our work a little bit more better, please feel free to connect with us anytime. Thank you.
Thanks so much, Claire. So our first speaker today is Peprah. Yao has had an incredible career and a very varied experience, which has led him to where he is today. So apart from being a qualified chartered accountant, Yao has worked at Standard Bank in their corporate and investment division. He spent 3 years as a shareholder in an advertising agency in Joburg. 6 years he ran a business that brought together his finance background and his marketing expertise. And he's also been involved in the production of 2 feature films. Currently, Yao oversees the trade investment film Invest SA One Stop Shop and the newly formed district unit business at Wesgro. He also co-founded the Silombona Education Trust that supports the tertiary education requirements of young South African women from historically disadvantaged backgrounds. Thank you, Yao, for making time for us today. I will hand over to you to start your presentation.
Thank you very much for that. Thanks for the invitation, Nicola. It's a pleasure to be part of this, and we really enjoy our relationship with the group. As Nicola mentioned, my name is Peprah, Chief Business Officer at Wesgro. I just thought I'd just take some time quickly just to give an overview of what Wesgro is for those of you that aren't familiar with the agency. So the agency was started maybe 40 years ago. It's an agency that is funded between the City of Cape Town and the Western Cape government. Our mandate really is just to promote tourism, exports, investments, and film in the Western Cape. But what we also do is we have a couple of strategic projects that we have been supporting over the last few years. We recently incubated the Special Economic Zone, which is a green economic zone in Atlantis, which is recently spun out, and it's a standalone operation. And our flagship project that we've actually really quite proud of is the Air Access project, which is really a project that helps us achieve our mandates in terms of driving the economic growth of the Western Cape. The Air Access project is really aimed at trying to connect the Western Cape to the rest of the world. I just thought I would just highlight some of our achievements in the past over the past year or so. So on the investment promotion side, which is one of our key mandates, we managed to attract 15 investment projects into the Western Cape to the value of 2.2 billion. Our efforts have resulted in 752 jobs being facilitated through these investments. As mentioned by Nicola in her introduction, we also oversee the operation of the Western Cape's chapter of the Invest SA One Stop Shop, which is really geared at trying to facilitate the ease of doing business and landing of projects or traded investment into South Africa. It's run by Salman and Kajie, who will speak after me, but their efforts of the One Stop Shop successfully assisted in 13 regulatory approvals and the first financial year of operation. This also played a role in helping us achieve 30% of our committed investments. Our trade promotion achievements, which is also one of our mandates, which is really trying to look at how we can assist Western Cape companies export more, sell more to the rest of the world. For those that aren't aware, I think maybe 50% of all South Africa's agricultural exports comes out of this part of the world. And so agriculture is quite key for us. And so we need to see how we can help grow that part, because it's a relatively, if I'd like to say, easy way for us to grow jobs in South Africa. So through our efforts, I mean, prior to about 4 years ago, what we used to measure was the number of companies we took into market, but we never really knew what the outcomes or what the impact of those people going into market was. So we decided to change the way we measure or evaluate our efforts. And we started bringing in the measurement of the value of our efforts, as well as how many jobs were linked to it. So over the last year, we managed to sign 79 business agreements, which facilitated, which resulted in an economic value of about 4.97 billion. That resulted in 921 jobs resulting from these business agreements. Part of our efforts as well is helping companies become export ready. So we've got something called an export advancement program, which we run, I think, 4 times a year, where we take companies that got an export potential through a series of training exercises to help them become export ready, so that when we do take them on one of our 40 odd outward missions, they are able to fulfill whatever exports that results therefrom. We would definitely encourage any of you out there listening to this who are either interested in investing in the Western Cape to please give us a call after this, so we can see how we can assist you, as well as if there's anyone who's looking to export currently here and they're struggling with access to market, etc. In spite of COVID and all that, we've managed to pivot our operations to an online platform. We've actually done a couple of outward missions already, even looking at doing an outward wine tasting mission, which is happening at the end of this month. It's going to be a first for us. We're looking forward to seeing what it looks like, and hopefully learning if we have to learn anything from that. Thank you very much for your time, and I'll hand over to Salman to just take the rest of the presentation forward. Thank you.
Thank you, Yao, and thank you again to both the organizers and the audience. It's certainly a pleasure forming part of this opportunity. So I just really, from an investment perspective, want to show you the composition of our traditional sectors for investment, our emerging sectors, and our high growth sectors, which is all on your screen at the moment. So the top tier of industries are really the traditional, and then we go sequentially into emerging and high growth. Now, the reason I show you the slide is really to illustrate the fact that Cape Town and the Western Cape is a globally competitive investment destination, and some of the largest companies in the world have answered that call and placed investment or their headquarters for the African continent in the Western Cape. And I think the slide really speaks for itself. I'm not going to go into too much of the detail there. But in the BPO space, we've got a heavily reliant on UK-based foreign direct investment, and as you can see, a good mix of local and international companies that make up our sectors. So just moving on, this slide shows the breakdown of foreign direct investment, firstly by country or source market, and secondly by sector. And as you can see, when it comes to capex, or rather number of projects, my apologies, the UK is certainly front and center in placing investments into the Western Cape. That's followed by the United States, and the United States, from a capital expenditure perspective, is certainly our primary target market. But just looking at the UK again, I mean, really 362 projects over the period above. 362 projects in the form of direct investment emanating from the UK as a source market. That figure really translating into about 16 billion rand worth of or $16 billion, my apologies, worth of investment into South Africa, and at least 26% of that coming to the Western Cape. So really, really solid relationships and mature business networks between the province and the UK. From that perspective. Just to show the sophistication of our economy, you can see that from a number of projects, again, if you look at the bottom tier of the slide, really coming in the form of business services. And as you saw previously, that was being driven a lot by the call center, the BPO, the legal process outsourcing space, which we are happy about because, again, it does show the complexity of the skills and the resources that are available in the market. So before moving on to the next slide, why do companies invest in Cape Town and the Western Cape? We firmly believe it's because of our resource strategy. It's because of our ability to provide access to consumer markets, both in South Africa and internationally, and the fact that in these sectors, we possess strategic assets for investment. The last slide, and it really just looks at the growth of the continent, and we see the continent as our primary strategic partners from a trade and investment perspective. I think here what you're looking at is just the range of GDP growth over the next 5 years, or from 2018 to 2023. And as you can see, that goes in some instances greater than 6%. Now, I leave you with a value proposition over here that according to McKinsey, according to the IMF, always 7 of the 10 fastest growing regional economies in the world are placed on the African continent. And we believe as Cape Town and the Western Cape that we are strategically positioned to provide you access to opportunities on the West and East African business corridors. And as you've seen in the first slide, lots of companies have already started answering that call to headquarter their operations in Cape Town and the Western Cape. And through our export promotion drives and our outward foreign direct investment drives, are capitalizing off of the opportunities that our partners are able to provide us on the African continent. So on that note, I thank you from my side, and a call to action. If there is anybody looking to explore commerce in the region, we're happy to assist you going forward. Nicola, thank you very much.
Thank you so much, Salman. Sorry, I'm just going to backtrack just a smidgen, just to give you guys some context around Salman and his expertise. So Salman is also highly experienced. He has got 12 years worth of international business development experience. He was instrumental in facilitating the foreign and domestic direct investment into the Western Cape. As head of Wesgro's investment promotion unit, he secured a very impressive 11.6 billion worth of direct investment over this period. He currently, as Yao mentioned, heads up Invest South Africa, a one-stop shop, which helped multinational companies establish their operations in this region. So thank you, Salman, for sharing your expertise with us today. So next up, we have got Tracey. Tracey is from, sorry, I'm just going to make that a little bit bigger. Tracey Botha is FirstRand Group's exchange control expert. She's been in the banking industry for 38 years and heads up FirstRand's exchange control team in the Western Cape, where her focus has been on building a positive platform to assist FirstRand clients, both from the individual to large corporate entities, to find solutions for their cross-border activities within the parameters of exchange control regulatory requirements. So thank you very much, Tracey.
Thanks, Nicola. Good afternoon, everyone. And thank you for your time today. And thank you too to the Africa Scotland Business Network for the opportunity to share this insight into our exchange control world. My name's Tracey Botha, as Nicola mentioned. I'm the Senior Manager positioned in the Western Cape, which is the most southern province in South Africa for those of you who are outside of our borders. I'm part of a larger countrywide team which looks after all matters encompassing exchange control for our customers of the various companies within our FirstRand group. This includes the business of First National Bank and Rand Merchant Bank, both of which are referred to intimately as FNB and RMB. There's also an investment arm known as Ashburton, and our vehicle finance division known as Westbank. We have other international businesses as well, but I'm mentioning the South African businesses. Many of you will possibly have an aversion to the term of exchange control, as over the years this has been viewed as a form of government imposition of heavy restrictions on both individuals and business. In fact, however, we can confirm that each and every country in this world has some form of capital control in place. So I'm just going to give a little bit of history, just to give a little bit of perspective. Exchange control in South Africa was initially introduced in 1939, when we were known as the Union of South Africa. This was established in the form of emergency finance regulations adopted by the Sterling area in order to prevent large capital outflows and retain a free movement of funds between the members of the Sterling area at the time. Following independence from England, the current set of exchange controls came into force in 1961 through the exchange control regulations being issued in terms of the Currency and Exchanges Act of 1933. Again, it was intended to protect the domestic economy from the adverse effects of non-economically motivated capital outflows, a serious concern at the time. During the 1980s, there was much upheaval in this area of cross-border financial controls, with the introduction, then the abolition, and further reintroduction of Rand restricted accounts, financial Rand and blocked accounts, and then also debt standstill arrangements. But much has changed since then. The exchange control system in South Africa in 1994 was principally applicable to outward capital movements, with the objective to ensure repatriation into the South African banking system of all foreign currency which had been acquired by residents, and to prevent the loss of such foreign currency resources through the transfer abroad of real or financial capital assets held in South Africa, thereby with the hope to create a healthy stock of foreign exchange reserves. 1994 was a momentous year in South Africa's history, which included Nelson Mandela becoming our president. The South African government decided on a gradual approach to the elimination of exchange controls as we knew it, rather than a big bang approach. A phased approach allowed government more time to implement other policy changes in order to achieve the preconditions necessary for a successful abolition of the exchange controls. South African government has made good use of these opportunities offered over the past years as a result of the subsequent inflows of capital to liberalize these exchange controls gradually. You can go to the next slide. Thanks. To provide a little more understanding to the bank's positioning in this exchange control environment, we confirm that the Department of National Treasury appointed the Financial Surveillance Department of the SA Reserve Bank to be responsible for the administration of exchange controls in South Africa. The banks operating in South Africa then apply for an authorized dealer license. And then once approved as an authorized dealer, the banks take guidance from the Financial Surveillance Department of the SA Reserve Bank through the instructions which are modeled in the authorized dealer manual. The AD manual, as we know it, and guideline documents for the public are now made available to the general public on the SA Reserve Bank's website. This provides transparency. This provides transparency and makes information available to all, not just to the appointed authorized dealers. In previous years, it was only the authorized dealer that had access to the guidelines, which made it very difficult for the public. The bank's exchange control team are mandated and are duly responsible to review all transactions which flow cross-border. So while exchange controls are not as strict as when I first started in this field in the tumultuous 1980s, there's still a responsibility to ensure that the country's reserves are preserved and protected. The banks provide the necessary guidance to their customers and ensure that transactions are effected within the parameters as set out by the authorities and that suitable records are maintained. And this speaks to both regulatory oversight as well as securities control, which is in the next slide. Thank you. In the current landscape of exchange controls, the Financial Surveillance Department of the SA Reserve Bank have advised the authorized dealers of their intention of moving from a rule-based to a risk-based approach. This has in fact been rolled out over the last 5 years, and we're now in the final stages. So while the authorized dealer's responsibilities encompass all cross-border flow of funds, the capital flows which are subject to securities control and cross-border investment structures are where our major focus is on. As mentioned, the guidelines for the review of all cross-border activities are provided to us in the authorized dealer manual. But in addition to this, authorized dealers, banks which have been granted a license, are also members of committees where differing views can be debated with fellow authorized dealers and the management, together with the management team of the Financial Surveillance Department. This is to ensure that there is a level playing field between the various banks and that we all have the same understanding of National Treasury's policies and requirements. At FirstRand Bank, we believe that foreign direct investment is key to support meaningful and sustainable economic growth. Simpler tax rules, investment incentives, improved regulatory policies on competition, and the protection of intellectual rights in South Africa have all vastly improved the foreign direct investment landscape for investors who are looking to engage in inward and offshore investments. And the last slide. So while we have provided a brief summary, no, if you can go back. Oh, there we go. Sorry, I'm looking at the wrong screen. Doesn't help. No, the next one. Sorry. Thanks, Nicola. There we go. So while I've provided a brief summary in the slide of certain information, which we may call for when reviewing an investment or structure, there may be an unusual approach undertaken on specific underlying transactions, and this applicant company will be called upon to substantiate that certain information. It is therefore very important that someone from our exchange control team is brought into the conversational consultation together with the investor's tax or legal consultants from the very early planning stages. We are not, the exchange control team are not necessarily tax and legal experts, and therefore we do encourage a collaboration. We can then be empowered to guide the involved parties in their investment structure on what may be permissible from an exchange control policy perspective. Please bear in mind that once the investment structure moves outside of current policy, it becomes very difficult to provide acceptable motivation should the parties require a specific and separate application to be submitted to the Reserve Bank. Then, just for ease of reference, the reasons why we would wish to ensure that suitable records are in place, specifically for inward investments. This is to maintain suitable records of the inflow of capital investment by the non-resident investor who needs to be clearly identified. The transaction must be concluded at arm's length and fair market-related prices. We ensure that the inflows of the funds are correctly reported to the various departments, in other words, share capital, shareholders' loans, and that those records are in place. And then once the inward investment requirements have been met and the share certificate is endorsed non-resident, this enables dividend proceeds to be remitted abroad in proportion to that non-resident's shareholding, as well as any other payments such as the repayment of shareholders' loans or interest that might be payable. Further, upon disinvestment, the endorsed share certificate together with any related documents pertaining to the sale would need to be presented to the bank. The local sale proceeds of the authorized non-resident investment may then be easily reviewed and subsequently transferred to the non-resident investor in line with their transfer instructions. We try and keep this as seamless as possible. Then also for outward investments, we need to maintain suitable records of the outflow of capital, which is authorized to be transferred by the South African investor. We need to ensure that the investment structure and as well as future investments by the respective shareholders and those party to the investment structure meet regulatory requirements. There are various conditions applicable to outward foreign investments, and the compliance by the SA company to these conditions are followed up on an annual basis, which results in an annual report on activities being submitted to the Reserve Bank. In conclusion, this may seem like perhaps too much information, or in some cases even too little. However, I do hope that it has provided some insight into what we do and why we do it. The main focus being to look after South Africa's reserves and ensure that the investors' interests, both into and out of South Africa, are clearly recorded and maintained in line with current compliance requirements. Thank you again for listening to me and to the Africa Scotland Business Network for the opportunity. We look forward to positive future engagements. Thanks very much.
Thank you so much, Tracey. Gosh, you really are a wealth of information. So next up is Aneria Bouwer. She is a law partner in tax practice at Bowmans. Aneria also has a wealth of experience at a very high level. She advises on all aspects of domestic and international tax, including inbound and outbound expatriates, cross-border expansion into or from South Africa, as well as advising clients on trading with and investment in other African countries. I'm going to hand over to Aneria now to take us through her thoughts around tax practice.
Thank you, Nicola. I just want to get the slides up, sorry. I can just share my screen here. Okay, can you see the slides on your side?
Yes.
Okay, great. Thank you also from our side for the opportunity to be involved with the Africa Scotland Business Network. RMB are old friends and we regularly work together with them in both inbound and outbound investment matters. Bowmans is an African law firm. We've got 3 offices in South Africa. I've got the privilege because it is COVID-19, working from home, which is a small West Coast town, with a lot of wind. So I hope it's not going to interfere with the reception, the Wi-Fi here. But we've got offices in Cape Town, Johannesburg, and Durban, and then also in Kenya, Tanzania, Malawi, Uganda, Mauritius, Ethiopia, and Zambia. So we are well presented across Africa, and we operate with a one firm approach that we work together in order to provide our clients with the best solution for the various jurisdictions where you may be involved. Now, as companies wishing to invest in Africa, and if we assume that you're going to start with South Africa as your gateway into the rest of Africa, one of the first questions is always what forms of enterprise we have in South Africa. And as you can see on the slide there, the most common forms of enterprise in South Africa are companies, trusts, and partnerships. Our companies are regulated and registered with the Companies and Intellectual Property Commission, also referred to as CIPC. We've got profit companies and we've got non-profit companies. And then an important distinction to understand, especially for non-residents doing business in South Africa, you could also register as an external company with CIPC, and that is commonly referred to as a branch. But it is important to understand that a branch does not have separate legal personality. So even though a branch could, for example, from an exchange control perspective, be regarded as a resident, it's important to understand that it's not a separate legal person. And when doing business as a foreign company in South Africa, it is important to know that there are certain instances where you will be required to register as a branch. And one of those examples would be where the foreign company is party to one or more employment contracts within South Africa, or it is, in the general terminology, carrying on or engaged in business within South Africa. We also have trusts in South Africa, but they're not typically used for business in South Africa, more in an investment type environment, so not really touching on trusts on this. Partnerships we also see in the business context. A partnership is also not a separate legal personality, so it is a see-through type structure, both from a legal perspective and from a tax perspective, although there may be certain instances where a partnership may have to be registered as a VAT vendor. So that is, very broadly speaking, the where we stand with respect to the different types of enterprise. Okay, so from an income tax perspective, South Africa has a residence basis of taxation, which means that from an income tax perspective, residents are subject to South African income tax on their worldwide income, while non-residents are subject to income tax on the income from a South African source. And source is a concept which has been dealt with extensively over the years in our case law. It is important to understand that source does not refer to where an amount is paid or where it is received, but one needs to understand what is the originating cause of the income. So what is it which gives rise to the income, and where is that cause situated? And that will be the source of the income. We also have capital gains tax, which is imposed on capital gains realized on the disposal of capital assets. Again, in terms of the residence basis of taxation, residents pay CGT on their gains on disposal of their worldwide assets, obviously subject to more detailed provisions and certain exceptions, while non-residents pay CGT on gains on disposal of South African immovable property or an interest in immovable property or assets attributable to a permanent establishment of the non-resident in South Africa. We've included a table there just to give a comparison of the different types of tax rates that apply to individuals, resident and non-resident companies and trusts. As you will see, individuals are subject to a sliding scale, income tax rates between 18% and 45%. Both resident and non-resident companies are subject to income tax at a rate of 28%, while trusts are subject to quite a high income tax rate. It's a flat rate of 45%. You will see that trusts aren't really the favorite child of the South African Revenue Service, or maybe it is because of the high tax rate. CGT rates for individuals, maximum 18%. Both resident and non-resident companies, 22.4%, and trusts subject to CGT at a rate of 36%. South African companies have to withhold dividends tax at a rate of 20% in respect of dividends declared to shareholders. You will see that there is no dividends tax in respect of a non-resident company, because a company cannot declare a dividend to itself. We also do not have a branch profit remittance tax. Dividend tax rate may be reduced in terms of double tax agreements. We've got a very wide network of double tax agreements with various of the more traditional trading partners, also with various other African countries. And dividend withholding tax could be reduced in terms of those DTAs. Typically, it would be reduced to 10% or 5%. We also have an interest withholding tax and a royalty withholding tax of 15%, both of which could also be reduced in terms of a DTA. Then if we move on to value added tax or VAT, it is an indirect tax on consumption of goods and services in the South African economy. Typically, VAT is levied on the supply by any vendor of goods and services, or the importation of any goods into South Africa by any person, and also on the supply of any imported services. Now, the question is always, if you're a non-resident doing business in South Africa, when do you need to register as a VAT vendor? And the answer is that if you carry on an enterprise in South Africa, you need to register as your VAT vendor. If your taxable supplies exceed 1 million Rand in a 12-month period, I don't even want to convert that to pound because it just sounds, it's too depressing from a South African perspective. I think it's about £50,000. Your definition of an enterprise, in the case of any vendor, any enterprise or activity which is carried on continuously or regularly by any person in South Africa or partly in South Africa, in the course or furtherance of which goods or services are supplied to any other person for a consideration, whether or not for profit. So there's got to be a degree of continuity, or it's got to be on a regular basis. Then there are certain types of activities which are specifically included in the definition of an enterprise. That includes the supply of telecommunication services to South Africans, also the supply of electronic services by a person in an export country to South African recipients. And especially in the context of telecommunication services and electronic services, it is important to note that you don't need a physical presence in South Africa in order to be carrying on an enterprise in South Africa. There are also specific rules, for example, in the context of oil and gas. In the Cape Town office, we do a fair amount of legal and tax work in respect of the upstream oil industry. And for example, your oil and gas companies, it is simpler for them to register as a VAT vendor than what it is for many other enterprises. A VAT is charged at a standard rate of 15%. Certain supplies, for example, if you export any goods or services, are subject to VAT at a rate of 0%. And the upside of that is that even though you charge VAT at a rate of 0%, you can still claim input VAT because you are making taxable supplies. Other supplies are exempt from VAT, for example, the supply of financial services or the supply of education. And to the extent that you incur a VAT expense in order to make exempt supplies, you will not be able to claim input VAT. So that's in respect of VAT. Then, if we look at the expansion into other African countries using South Africa, what we need to consider is what is the tax treatment in those jurisdictions, and also how do they, what is their view in respect of double tax agreements. So to give you an example, some issues which we've recently seen in respect of clients doing business in some other African jurisdictions is that they, for example, render management services to a company or to a client in another African jurisdiction. The African jurisdiction then withhold tax on those service fees, and if the company rendering the services is a South African company, South Africa will tax those same fees and will not give a foreign tax credit for the tax withheld in the foreign jurisdiction, because those services or that income is not from a foreign source. And in terms of South African tax rules, we'll give a credit for income from a foreign source, but not for income from a local source. And then there are issues with respect to double tax agreements, because South Africa will say the foreign country is not entitled to impose the withholding tax because the service provider doesn't have any kind of presence in the African country. But we've come across a number of instances where the African country will then argue that they do have the right to tax the income. And that's quite a conundrum if you end up in a scenario where you have that double tax, where you're paying tax in both South Africa and in another jurisdiction. And it's important to have an understanding of that before you expand offshore, so that you can deal with those issues to the extent possible when you plan how you're going to be structured going forward. Now, we were talking about headquarter companies. South Africa has introduced specific regime in order to make South Africa more attractive as a headquarter company regime. There are certain requirements in that regard, which one needs to keep in mind in order to qualify as a headquarter company. But there are certain benefits. Our controlled foreign company provisions do not apply to a headquarter company, so that, that income will not be taxed in South Africa. There's a participation exemption in respect of foreign dividends received by a headquarter company. Dividends, royalties, and interest paid by a headquarter company are exempt from withholding tax. There's also a participation exemption in respect of a capital gain or loss on disposal of equity shares in a foreign company, and some relaxations in respect of transfer pricing and thin capitalization. I see I've run ahead of myself, because there on the slides is the issue in respect of the management services, which I've just talked through. But basically, if you render services in another country, then you need to consider whether the jurisdiction where your service provider is tax resident will give a credit for the withholding tax, whether there is a double tax agreement which regulate that relationship so that one can determine where the taxing right lies, but then very importantly, to get an understanding of how that African jurisdiction interpret the double tax agreement, because it may be that one has a look at the DTA and that the advice will be that, let's say, South Africa has got the taxing right, but that may not be necessarily how the other jurisdiction interprets it. We also have a domestic treasury management company regime, which provides for certain exchange control relaxations. So that is venturing into Tracey's territory, so I won't run into that. And then from a tax perspective, that regime also has certain income tax relaxations regarding the tax treatment of local currency, which helps to minimize any tax implications of unrealized foreign currency gains and losses. So that was also a bit of a mouthful. I think the important thing for you just to understand is that South Africa is, we've got a well-developed a tax system, an exchange control system. There are some relaxations in that regard. And we are well represented. We're doing a lot of business with the rest of Africa, but it is very important to know what you are dealing with so that you can plan accordingly before you, you venture out and you establish your structures. Thanks, everyone.
Thank you so much, Aneria. We really appreciate you sharing. That's obviously a lot of information to take in. So I urge anyone who needs more information to connect with the Bowmans team directly. We're just going to pause quickly for 2 minutes. We're going to do a quick poll. So Danny's going to launch that poll for us. I'll just give you a couple of minutes to complete the questions, if you don't mind. Just give you another minute. Okay, I think we'll probably leave it at that. I hope everyone's had enough time to answer those questions. So thank you to our panelists. That was certainly incredibly interesting for myself. We're now going to launch into our Q&A session. So if you would like to, just in the little Q&A box at the bottom, just pop in any questions that you have for any of our panelists, please do so. And I will happily read them out on your behalf. They should be, you'll see at the bottom the little speech bubbles sitting there. And if our panelists could please unmute themselves, obviously, when a question is directed at them. So to kick off, I have a question for Aneria in terms of tax exemptions. So I've heard about these special economic zones where tax exemptions can apply to, or exemptions or reductions apply to help boost economic growth. How would people find out more about what those zones would be and what kind of benefits are available? What kind of resources are available to help inform that?
The government has got very useful sites on the special economic zones. The main tax benefit is that if you are situated in a SEZ, that you're subject to income tax at a rate of 15%. There are also certain customs and import VAT, etc. benefits. But what is important to understand is that the specific SEZs are focused on specific types of activities. So the SEZs which are closer to our harbours are focused more on, for example, the steel industry, exports, etc. The SEZ which is close to the airport in Durban is also focused on specific activities regarding goods that can be exported via air travel. We've got SEZs in the Western Cape as well. One of them is focused on green energy. So there are specific benefits, but it's important to understand that they are geared at specific types of economic activity. So one need to do your research before you decide where you want to establish, based also on what you want to focus on. But the government's, the websites on SEZs are quite useful in that regard.
Great, thank you so much. So see if anyone else has a question. I have lots of questions. So for the Wesgro team, so Yao, what, you guys offer like a really fantastic resource and support for businesses. What kind of businesses would be eligible to receive support from Wesgro? Are there any specific criteria? Or is it a case that small, medium, large businesses can approach you and take it from there? What are some of the criteria that people need to be aware of?
Yeah, so it's become quite blurred over time, but ideally we try and look at companies with a turnover of about 50 million plus, but we go down, we basically just analyze let me actually put it like this. We'll help any business that comes to us. If it's not through us, we'll direct them to either the city of Cape Town. We've got a business development center which basically helps smaller companies. We'll direct them to the Department of Economic Development and Tourism, because they've also got a division that looks after SMEs that might not fit into our part. If it's not even anywhere in government, we can direct them to the likes of the Small Enterprise Finance Agency or CEDA, which is a government agency, will help them along the way. So any company that comes to us leaves with some sort of direction in terms of what would be required in terms to help them achieve what they need to achieve.
That's brilliant. Thank you so much.
Cool.
Just going to see if anyone has any other questions. I don't see any other questions popping up. So I think we won't keep everyone waiting, but I do urge you to connect directly with our speakers today. If anyone has any questions or requires their services, they obviously have a lot of knowledge and expertise to share. So if you'd like the details, please get in touch with us. We'll send an email out after the session, sharing, or you can just connect with us that way. Before we wrap up, I just wanted to say that this is a series of 3 webinars. The next one is going to be on an Africa and Economic Outlook, and that will be on the 19th of August at 2 o'clock. And we're still finalizing our panelists, but we will definitely have someone from the RMB team joining us, and they are just fantastically talented team. So that's going to be awesome. So here are our contact details. Please get in touch. Thank you so much for joining us. I hope it was an hour well invested. There's certainly, it feels for me, just scratching the surface of what is just so much information. So obviously I urge you, as I said before, connect with our panelists and take those conversations further. And if you'd like to know more about the network, these are our details. Please get in touch. We would love to chat to you and see how we might assist you in your businesses and with various connections that you might require. Thank you again so much for your time, and take care. Bye now.
Thank you. Take care.